Hi guys, very good morning all of you. Welcome back to CAP classes. So today we are going to discuss how to write auditing examination. We are going to see one mock test paper, we are going to see revision test paper, and also we are going to see one solved examination answer sheet of a student which is evaluated by ICA, and I have obtained that so that I will show you the answer sheet evaluated by ICA, so that you understand how the marking pattern will be, how stepwise ICA allocates marks, and also all these things we are going to do today. Okay, so with me I have one Miss Reshma Kumar. So she'll be helping us, she'll be interacting, and all the other students in the class, you please carry one notebook and a pen. I'll be asking so many questions. You need to write the answers. If we are doing MTP or RTP, if there is any case scenario, or if there is any, other than case-based MCQs, when I read the question, you should be writing the answers, and then we'll see how many marks you scored. Okay, so because we reached the end of the rope, and in few days you are going to write auditing examination, it is pretty much important for you. Take a notebook, take a pen, and sit properly. Okay, so we are doing this mock test paper for CA Intermediate new syllabus. Even if you are old syllabus student also, please follow me, write the exam, or attend this MTP revision session, because I do not find any difference between old and new syllabus except 1-2 parts like bank audit. Other than that, everything for me, I feel it is same. And for your information, I know many of you people are aware of this, but for the sake of your clarity, I'm telling you, in auditing question paper, there are two divisions, Division A and Division B. Division A is for multiple choice questions. Division A is for multiple choice questions. Okay, Division B is descriptive questions. Division B is descriptive questions. So first we are starting with multiple choice questions, and then we'll go to descriptive questions. Multiple choice, as I told you, is for 30 marks. Descriptive is for 70 marks. And in this 30 marks of multiple choice, there are two case study based scenarios. So they'll give you one case. After that, they'll ask 5 questions. You need to answer that in MCQ mode. That means they'll give you ABCD options. You need to pick the correct option. Third question will be general MCQ, no connection with the case study. Okay, so that is what it is going to be. So we have Roshni Jaikumar. Roshni, can you please start reading this mock test paper now?
Yes, sir. I'll start with the question 1, sir. Yeah, Mr. Lakshman is appointed as a statutory auditor of BEST Limited for the financial year ended 31st March 2020. Okay. During the course of audit, it was found that the few doubtful transactions have been committed by finance manager who retired in March 2020.
Okay.
Fraud was going on since the last 4 to 5 years, and the total amount misappropriated is approximately rupees 75 lakhs.
Okay.
Balance sheet of the BEST Limited reflected a cash balance of rupees 7 crores.
Okay.
The company had taken a loan of 2 crores from the bank despite of the huge cash balance with the company.
Okay.
Also, Companies Act bestows some duties on the auditor to report matters to the central government in case of fraud.
Okay.
On the basis of the above facts, answer below questions in relation to Mr. Lakshman's role and duties while conducting statutory audit of BEST Limited.
Okay.
So can I read the question?
Yes.
The questions.
Yes. Continue, please.
Mr. Lakshman shall obtain dash that the financial statements are free from fraud and misstatement.
Fraud and misstatement. Okay. So listen here. Even in case scenario based MCQs also, many a times they'll ask certain questions which are actually not related with case. For example, you look here, the auditor shall obtain dash that the financial statements are free from fraud and misstatement. This has no connection with this case study, whether it is this case study or any case study or general MCQ. The auditor shall obtain dash that the financial statements are free from material misstatements, fraud and misstatement. So this is actually a general question, no connection with the case study. So all of you take book and pen and write down the answer. Mr. Lakshman shall obtain dash that the financial statements are free from fraud and misstatement. A, absolute assurance. B, reasonable assurance. C, management's assurance. And D, chief financial officer assurance. So if you write wrong answer to this question, what to do? Go to 7th floor and jump from there. Because this is ABCs, basics of auditing. So I hope all of you have written the answer in your notebook. Roshni, have you written the answer?
Yes, sir.
Don't tell it to anyone. Secret your answer is. Tell it to me. Okay, what is the answer?
Sir, reasonable assurance.
Very good. Okay, read the second question, ma.
Mr. Lakshman suspects that the cash payments were inflated. Out of the below, which would be probable reason for such inflated cash payments?
Okay.
Option, not accounting for cash sales completely.
Okay.
Making payments against purchase vouchers.
Okay.
C, making payments against inflated vouchers.
Okay.
D, teaming and lading.
Okay. So, see, what is the suspect here? What is the doubt here? Cash payments are inflated. So, if cash sales are not recorded completely, cash receipts come down. Cash payments will not be inflated. Making payments against purchase vouchers. If you are making payment against purchase voucher, payments will not be inflated. Payment will be recorded. Third one, making payment against inflated vouchers. That means 100 rupee voucher, you are writing 120 rupees and you are making payment. And fourth one is teaming and lading. Okay, you might have studied in your first chapter, teaming and lading is one of the, types of frauds committed with the collusion, the cashier and the accountant. With the collusion they can do, or the cashier alone can do. It is misappropriation of cash collected from the debtors. Teaming and lading is misappropriation of, that means, you will not record the cash, and when subsequently another debtor pays you money, then you will record the receipt from the first debtor. So you are rotating. These are, 4 options, A, B, C, D. So guys, you write what is the correct answer for you. Okay, so 2 you have done, then okay, so in the chat box is open. In the chat box, you can type what is the correct answer for 2. All of you in the chat box, you can type what is correct answer for you. Now, you can go ahead and read third question, ma.
Yes, sir. As per section 143.12 of the Companies Act 2013 and Rule 13 of CAR 2014, Mr. Lakshman shall, option A, report the matter to the audit committee constituted under section 177 or to the board in other cases within such time and in such manner as prescribed.
Okay.
Report the matter to the audit committee constituted under the section 177 within such time and in such manner as prescribed. Option C, report the matter to the audit committee constituted under the section 177 and also to the board within such time and in such manner as prescribed. Option D, report the matter to the board within such time and in such manner as prescribed.
Simple question, but a tricky question. Many students will be confused. Pavan sir, what is the difference between the CA bit and C bit? A bit and C bit difference is, here the word used is or, here the word used is and. So in option A, they are saying that the auditor shall report the matter to audit committee. Or if audit committee is not necessary for the company, then you should report to board. That is A. C says you should inform audit committee and you should inform board also. Okay, so what is correct answer? You tell me, guys. Guys, in your chat box, you can tell me the correct answer. Okay. Aisha is saying A, Alka is saying A. What about others? So many students are there. Tirtha is saying C. Safina is saying A. Aishwarya is also saying A. Okay, A is correct answer. A is correct answer. If audit committee exists in your company, then inform audit committee. If audit committee is not there, then the auditor reports the fraud to board of directors. Okay, so first one answer is reasonable assurance 1B. Second one answer is making payments against inflated vouchers 2C, and third one is 3A. Next, read the fourth one, ma.
Owing to the dash limitations of an audit, there is dash risk that some material misstatements of the financial statements will not be deducted, even though the audit is properly conducted, properly planned and performed in accordance with the essays. Option
so,
A.
Tell me one thing. Is there any connection with the case and question number 4? No connection. Is there any connection between that case and question number 3? No connection. Is there any connection between the case and, case study and question number 2? No. Is there any connection with the case and question number 1? No. Actually, this 4 can be normal MCQs also. Are you getting my point? These 4 questions can be general MCQs also. There is no connection between the case actually. Okay, so read the 4th question, ma. Owing to dash limitations of an audit. If you have brain, it is inherent limitations. Now the beauty is elimination. There is a technique in writing MCQs called elimination. Do you know what is elimination? If you do not know correct answer, first eliminate wrong answers. Do you know the technique? If you do not know the correct answers, eliminate wrong answer. If you know the correct answer, then highlight the correct answer, then see the remaining things. Say for example, I am a student, I am confident only about the first blank. I am confident only about the first blank. There are 2 blanks. Second blank I do not know. Owing to the dash limitations of an audit, I know that it is inherent limitations. So inherent is the correct one. So second one says inherit, which is wrong. Third one says management, which is wrong. Fourth one says regulatory, which is wrong. So A is the correct answer. This is how you should write MCQs. See how easy it is. You know that it is inherent limitations. Then B is wrong, C is wrong, D is wrong. Then what is correct? 1 is correct. Now put 1 in that blank sections and then see whether the sentence is proper. Due to inherent limitations of an audit, there is unavoidable risk that some misstatements in financial statements will not be detected. Correct. So what is the answer for 4th question? Guys, tell me in the chat box what is the answer for 4th question. Fast. We don't have much time. Yeah. Yes, everybody is saying yeah. Correct. So read the 5th question, ma.
As an auditor, what conclusions can Mr. Lakshman draw looking at the huge cash reserve of the company and corresponding bank loan?
This is probably the only MCQ. This is the only MCQ which is connected to case study. Now go back to case study. In the case study, they said company is having 7 crores of cash balance and they took 2 crore rupees of loan. Now the question is, when you have 7 crore rupees of cash in your hand, why are you taking 2 crore rupees of loan? Unnecessarily you will pay interest also. So in this situation, what is the question? Read 5th point, ma'am.
As an auditor, what conclusion can Mr. Lakshman draw looking at the huge cash reserve of the company and the corresponding bank loan?
Okay.
Option A, report this matter to the central government under section 143(12) as there is a possibility of fraud.
So
Option
do you think
B,
there is a fraud, ma'am?
Yes, sir.
Need not be. How can we conclude that it is a fraud? It is abnormality. Need
yes,
not be a fraud. Who knows? So reporting to central government under 143 subsection 12 is a situation where being the auditor, you believe that there is a fraud. But if I am auditor, there is no apparent fraud from this. There is a doubt. When there is a doubt, what will you do? You have to obtain more evidence and you dig deeper. You will dig deeper. You will intricate. You will extend the depth of verification. But how can you conclude that it is a fraud? So A is not a correct answer. Then B, obtain sufficient and appropriate audit evidence of existence of fraud. Is there a fraud? Obtain sufficient appropriate audit evidence. This is B. C, report the matter under CARO. Under CARO, will you report this? Remember, in CARO, the frauds are there, no? They are the frauds on the company or the frauds by the company. Is the company doing a fraud here? Is any officer or employee of the company deceiving the company? Is the company victim? Is the company deceiving any third party? No, actually, CARO will not come onto the picture here. CARO reporting will not come onto the picture here. Then 4, there is nothing to report as it is a normal financial decision. Some students will write D as the answer. Normal financial decision. No. What you need to do in this situation, for me, I have the answer in my mind. I am asking you. You tell me the answer in the chat box. Fast. Don't make much time. Don't take much time. Alka is saying B, Aisha is saying B, Anjuma is saying B, Ashika Ahmad is saying B, Aishwarya is saying B. What about others? B is correct answer. Krishna is saying B, Alex is saying B, correct. So B is the correct answer. So 5 answer is B. Okay, now read second case study, ma.
Group and company are the auditors of Honda Group of Hotels. This is the first time the firm is auditing an industry in food and beverages, and it is day 1 of the audit. The engagement partner, along with his team, wants to make a thorough understanding of the entity and its environment in order to identify and assess the risk of material misstatements, whether due to fraud or error. The following are the some points identified by them on day 1.
When you read this story, you have to understand that you are doing this audit for the first time. So you are trying to comply with this SCA 315, SCA 300, audit planning stage, risk assessment procedure stage, understanding the entity and its environment in order to identify and assess the risk of material misstatements that you are trying to do. Now go through this. Read.
Question one, portion 1. The hotel has 2 banquet halls. The documentation available for verification of banquet hall revenue is only the invoice raised by the hotel and some mail conversations on customer enquiry and finalization of price. In audit trial, it is found that the finance approval of the transactions is only after invoice is sent to them for the accounting and final statement. Advance payment by the clients are not vetted through finance team. The auditor suspects a weakness in the system.
So can you tell me what happened in this situation, ma? There is no proper control on, receiving the advances, verifying the advances received by the company, by the finance team, and then price fixation, then allocation of banquet hall, receiving the consideration, documentation and accounting. There is no proper control system. When there is no proper control system, what type of risk will increase? Inherent risk, control risk, or detection risk? Guys, I'm asking you, if there is no proper control system, if there are weaknesses in internal control, what type of risk will increase? Control. So everybody is saying control risk. Okay, very good. Then continue question mark, second part. Read part 2.
The auditor also finds a control deficiency in the process of procurement of stores.
Okay.
A goods receipt note is not prepared at the time of receipt of goods. On enquiry with the management, the auditor finds that there exists a system control wherein goods receipt note is automatically prepared and approved in the system once the quantity and the price of the goods is entered against specific vendor.
Okay.
This entry is on real-time basis and system does not allow backdated entries.
So, auditor found that when the company is receiving goods received note is not recorded. But there is a system. Whenever the quality control department or the inspection officer verifies the price of the goods and quantity of the goods received, system automatically prepare and approve the transaction. The goods received note will automatically be generated, but GRN cannot be generated with a back date. If you are printing GRN now, with this time, this date only it can be printed. Backward date printing is not possible. That is the fact of the case. That is in point number 2. Continue on, read point number 3.
The auditor inquires of the management as to what is the risk assessment process followed by the entity for the prevention and deduction of the risk of material misstatement due to fraud and error. The auditor finds there is no documented risk assessment process.
So, auditor inquired the management whether there is any risk assessment procedure followed. Then auditor came to know that there is no documented RAP. Risk assessment procedure is not documented. Okay, that is what auditor found. Okay, now let us go to the questions.
What kind of a risk is portrayed in the booking of revenue with respect to banquet halls? Option A, inherent risk in the class of transaction. Option B, control risk in the class of transaction. Option C, deduction risk in the audit procedures. D, audit risk in the opinion of the financial statements.
Tell me the answer. Guys, tell me the answer in chat box. B is correct answer. Continue. Question number 2. Question number 2.
Sure, sir. Which among the following statement is incorrect in the context of audit risk? Option A, the more extensive the audit procedures performed, the lower is the deduction risk. Option B, greater the risk of material misstatement the auditor believes exists, less is the deduction risk that can be accepted, and accordingly, more persuasive evidence is required by the auditor. Option C, audit risk means the risk that the auditor gives an appropriate audit opinion when the financial statements are materially misstated. Option D, risk of material misstatement at the assertion level is of two kinds, control risk and inherent risk.
So, is there any connection between the case study and the second question? The answer is no. The second question is a general question. It has no connection with the case study. So, guys, tell me what is the correct answer for 2? A, B, C or D? Fast, 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 fast. Don't take much time. Basic question. Tirtha is saying answer is C. What about others? Hello, what about others? Safira is also saying C. C is the correct answer because audit risk means the risk that the auditor gives an inappropriate opinion. Here they are telling that appropriate opinion. If you give appropriate opinion, what is the risk in that? If you give inappropriate opinion, that is the risk. So for second question, the answer is C. Okay, tell me ma, next question.
In the case of procurement of stores, the auditor has tested more than one control for the same assertion. In that given case, what should be his reliance on the control? Option A, since compensating controls are identified, if tested and evaluated to be effective, the auditor can rely on the control. Option B, even though the compensating controls are there, since one control is ineffective, the auditor should not rely on the control of his assertion and should perform extensive procedures. Option C, documentation in electronic medium cannot be accepted. Hence, he cannot rely only on the system control. Option D, even though compensative controls are there, since one control is ineffective, the auditor should not rely on control for this assertion as well as associated assertions.
Beautiful question. This is a quality question. This has connection with the case study also. In the case study, if you observe, when the goods are purchased, goods received note is not generated. But there is a system of generating goods received note on real-time basis without a possibility of backdating. When the inspection officer inspects the quality and pricing, goods received note is generated. Now the question is, there are two, controls the auditor is looking at. At the time of receiving the goods, GRN, at the time of accepting the goods into godown, GRN. So when the auditor is verifying, controls simultaneously on the same matter. Controls simultaneously on the same matter. So here the point is, one control is missing, but there is a compensating control. So should I rely on the control? Or should I say system generated control I will not accept, so I am ridiculing the control? Or if one control is ineffective, shall I conclude that all the associated controls are ineffective? What am I supposed to do? That is the question. So read 3 A, B, C, D and tell me the correct answer. Don't take much time. Read 3 A, B, C, D and tell me the correct answer. Tell me the answer. Many students will give answer B, which is wrong. Remember one thing. If you have a compensating control and the compensating control is working effective, then you can rely on the controls. So the answer is A. Since compensating controls are identified, if one control is tested and evaluated to be effective, the auditor can rely on the control. Okay, good. Then 4. Read the 4th question, Ma.
In the context of SA 315, which among the following is not a risk assessment procedure? Option A, inquiries of management of appropriate individuals within internal audit function and of others within the entity. Option B, analytical procedures. Option C, observation and inspection. Option D, audit planning.
Very good. Do you remember RAP, R-A-P, SA 315, RAP, R-A-P? I have given you an acronym also. I-A-O-I. What is that? Inquiry, analytical procedures, observation, inspection. Audit planning is odd man out. Audit planning is odd man out. It is not a part of risk assessment procedure, no? Audit planning is not a part of risk assessment procedure. So the correct answer is D. 4D is the correct answer. Okay, read the fifth one, ma.
What should be the course of action of the auditor for the entity not having a documented risk assessment process?
Okay.
Option A, the auditor should obtain management written representation on how risks are identified.
Okay.
Option B, the auditor shall discuss with the management on how risks are identified, addressed and determine whether the absence is appropriate in the circumstances or whether it represents a significant deficiency in the internal control.
Very good.
Option C, the auditor should advise the management to document the same immediately and accordingly opine on the same in his audit report too.
Okay.
Option D, the auditor shall discuss them with management on how risks are identified by system and place reliance on the same as documentation in this context is immaterial.
Okay, so tell me, as an auditor, what will you do? A, B, C or D? See, certain things can be eliminated. Again, play the elimination game. For example, give opinion in the audit report. Is there anything written anywhere in the Standards on Auditing or in the Companies Act that if risk assessment procedure documentation is not proper, the auditor has to report that in the audit report? This is a bakwas point, ridiculous point. So C, you have to strike off. Remember one thing, management written representations are never dependable. You can only corroborate some evidence available with management representation, written representation letters. So A is also to be ridiculed. Okay. Then B and C, the auditor shall discuss with management on how risks are identified. Up to this, B and D are same. So B and D will be confusing. B says identified, assessed, determined whether the absence is appropriate in the circumstances. That means documentation is absent. Is it okay? Whether it represents a significant deficiency in the internal control. Is this what you think? Or D, the auditor shall discuss with management on how risks are identified by system and place reliance on the same. Place reliance on the same as documentation is immaterial. This is what they are saying. B seems to be 100% correct answer. So you tell me, what do you think? 5 A, B, C, D, which one is your answer? After I told the answer, everybody will say B only. No? I should have asked you before. Okay, chalo, general MCQs. Ma, read general MCQ.
Question number 1. Which of the following is not an example of an event or condition that may cast significant doubt on the entity's ability to continue as a going concern? Okay. Option A, loss of key management without replacement. Option B, adverse key financial ratios. Option C, inability to pay creditors on due date. Option D, current year profit turns to loss after providing depreciation.
Remember what these things are? Do you remember what these things are? SA 570, going concern. So, do you remember there are indicators, operating and financial indicators. So, loss of key managerial personnel without replacement, adverse key financial ratios, inability to pay creditors, current year profit turns to be a loss after providing depreciation. Which one among A, B, C, D is an indication that the going concern is in a problem? You tell me, guys, tell me the answer. Alka is saying D, Alex is saying B, very good. Then what about others? D. Hey, Alex, read the question carefully. Which of the following is not an example? Not an example. Adverse key financial ratios are classic indicators. How can you say that is not the one? Someone is saying A is also correct answer. My dear friend, this is operating indicator. Correct answer is D. Current year, if the company is in losses, there is no problem to going concern. Current year, profit after providing depreciation has become a loss. So what? Profit before depreciation is positive. Then you charge depreciation. Profit after depreciation before tax comes to negative. So what? That doesn't mean you are not a going concern now. So the correct answer is 1D. D is correct answer. D for Delhi. Okay, next, second one. Read second question, ma.
Which of the following is not correct? SA 700, forming an opinion and reporting on the financial statement. Option B, SA 705, modified opinion. Option C, SA 701, communicating key audit matters. Option D, SA 706, comparative information.
So tell me which is the wrong one. All of you type it in the chat box. A, B, C or D. Which one is wrong? Everybody is saying D because 706 is emphasis on matter and other matter paragraph. 710 is comparative information. So they are saying 706 comparative, which is wrong. So the correct answer is D. I'm happy everybody told it correct. Next, read the next one, ma.
A Limited has been assigned a cash credit limit of rupees 20 lakhs as against his book debts furnished as security. What kind of security creation it is? A, pledge. B, mortgage. C, assignment. D, set off.
So tell me the answer, guys. You have shown book debts, assigned book debts to a banker as security, and they have given you a cash credit of 20 lakhs. Is it a mortgage loan? Is it pledge? Is it a set off? Is it assignment? Which one is correct answer? A pledge is for movable, tangible asset. For example, gold chain. You can pledge a gold chain. Mortgage is usually for intangible assets. Set off means one balance knocking off with another balance. A is wrong, B is wrong, D is wrong. So the correct answer is C, assignment. Even if you do not know technically what is assignment also, by way of playing the elimination game. A, pledge, debtors cannot be pledged. B, mortgage, debtors cannot be mortgaged. D, set off. What is the meaning of set off here? Set off is a ridiculous option. So the correct answer is assignment. Read the fourth one, ma.
Dash is a possible obligation that arises from the past events and
enough. Answer. Over. Don't read full also. If you tell wrong answer to this 4, you don't need to go to 7th floor and jump from there. I will take you to 7th floor and I will throw you from there. Hey. How come A is answer right, Chambu? Yeah. C, contingent liability. Provision is a present obligation. Possible obligation, but provision will not depend on the future event, no. Will be confirmed only by the occurrence or non-occurrence of one or more future event. Over. Contingent liability. 10th class boy also can write the answer. Okay. Fifth one.
The concept of materiality is applied by the auditor. A, in planning and performing the audit. B, in evaluating the effect of identified misstatements on the audit. C, both in planning and performing the audit and in evaluating the effect of identified misstatements on the audit. D, none of the above is correct.
Common sense. Again, common sense question. You don't need great auditing knowledge also. Common sense question. Tell the answer. Guys, tell me the correct answer. With this, 30 marks episode is over. Alka, your answer is right. Santosh right. Krishna Sivapriya right. Ashik Ahmad right. Very good. Shivani Chauhan right. Tirtha right. Materiality shall be applied in planning the audit, while performing the audit, while evaluating the effect of identified misstatements on the audit in all these 3 cases. So C is the correct answer. Okay. So 30 marks is over. I hope all of you got 25 or above, or at least 24. How many of you got 24 or above out of 30 marks till now we have done? Did you do 80% correct answers? You have written answers in your notebook. If you are able to get at least 70-80%, type I in the chat box. Then I understand that you are on the track. How many of you are able to get 70-80% of the answers correct? 1, 2, 3, 4, 5. Okay, very good. Continue, ma. Descriptive questions, division B.
Examine with reasons, in short, whether the following statements are correct or incorrect. Attempt any 7 out of 8. 1. Mr. Z, a team member of Auditor of Grateful and Competent Limited, was of the opinion that while conducting an audit of a company, no distinction is required to be made between revenue expenditure and capital expenditure.
Seriously, boss, then what is audit if you are not making a distinction between revenue and expenditure? So tell me, one is correct or incorrect? All of you do it fast. One is correct or incorrect. Here you need to write a single line also. Tirtha, you are saying incorrect. What about others? Incorrect. First you need to write incorrect, underline. Under that you need to give reason in one single line. A distinction between revenue and capital expenditure shall be made so that the financial position and financial performance will show true and fair view. Like that you need to write a single line. Okay, then read the second one, ma.
The audit engagement letter is sent by the client to the auditor.
Super. Correct or incorrect? Hello, answer please. Correct or incorrect? Incorrect. Audit engagement letter. Correct. Oh, no. Someone is saying correct or wrong. Audit engagement letter is sent by auditor to the client. Auditor will send the letter to client. Client will not give. This is not, my employment appointment letter. No, if I'm employee, you will give appointment letter to me. If you hire me as your auditor, if you appoint me to be your auditor, I will give engagement letter to you. Auditor will give engagement letter. Okay, read third point, ma.
A detailed audit program, once prepared for a business, can be used for all business under all circumstances.
Bolo, correct or incorrect? Can you prepare one single audit program and use it for all the audits? Seriously, businesses differ in size, nature, activities, complexity of the operations. So the audit program should be tailor-made, customized to the client. Single audit program cannot be used for all the clients. Incorrect. Next, 4.
Assertions refer to the representations by the auditor to consider the different types of potential misstatements that may occur.
Many people will write wrong answer here. So tell me guys, what is your answer? For fourth one, what is your answer? Ashik is saying incorrect. Assertions refers to the representations made by management embedded in the financial statements. Assertions refers to the representations by the management that underlie, that are embedded in the financial statements. It is not auditor's representation, it is management representation. So 4 is also incorrect. Next, read the fifth one.
One of the directors of Very Fresh Foods Limited was of the opinion that the internal auditor to be appointed must be an employee of Very Fresh Foods Limited.
Okay, so internal auditor must be an employee. Is it a rule? Internal audit must be an employee. Is it so? So you can't appoint outside chartered accountancy firm. So tell me the answer for fifth one. Very good. Incorrect. As per section 138 of the Companies Act, internal auditor can be a chartered accountant or a cost accountant, whether in practice or no, or of any qualification which the board feels good. So nowhere it is stated that the internal auditor should be employee. He can be outsourced. He can be external party also. Next, read the next one.
Audit committee is to be constituted by every public company to ensure better standards of corporate governance.
Is it so? Is audit committee compulsory in every public limited company? No, incorrect. Audit committee, according to section 177, is required in every listed public company, and in other public companies there is a criteria. So paid up share capital 10 crores, then your turnover 100 crores, and then your borrowings, aggregate outstanding borrowings should be 50 crores. Then audit committee is compulsory. Otherwise, you don't need to have an audit committee. Okay, so incorrect. Next, read the seventh one more.
The auditor has to report under section 143 of the Companies Act 2013 whether company has adequate internal controls in place and overall effectiveness of such internal controls.
Yes or no? Correct or incorrect? Tirtha is saying correct. What about other students? Everybody is saying correct. My dear friends, welcome to trap. This is wrong. The auditor has to report under section 143 of the Companies Act whether company has adequate internal financial reporting controls over preparation of financial statements. Why the hell I need to verify all internal controls? Internal controls can be quality controls also. Internal control can be whether your washroom is hygiene or no. Internal control can be your security guard. Internal control can be, how your office is maintained. Why am I concerned? I am concerned only about the internal financial controls over financial reporting. Internal financial controls over preparation of financial statements. That is what I am concerned. So this is also incorrect. Ding, 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 ding. Next one, read ma.
Tangible assets are depreciated when the asset is actually put to active use.
Tell me answer. This is general knowledge question. Nothing with audit. It is basic accounting knowledge. It is. So the tangible assets are depreciated when they are put to active use. That means if you are not using the asset, no depreciation is required. That is what they are saying. Ray, Andavane, Amma, Taye, Bhagavane, Rakshikane. What type of answers you are giving? Fixed assets are to be depreciated if they are ready for the intended use. Even if they are not put to use also, depreciation is mandatory. For charging depreciation, active use is not required. If the asset is ready to use, it is enough. Put to use is not required. What you are studying, accounting standards and all, you need to read properly, okay? So this is a 14 marks question. 7 bits are there. How many of you answered 5 or more correct? Out of 7, 5. There are 8, okay? Total 8. In 8, how many of you did 5 or more type I? Guys, can you believe? Santosh is saying 7 out of 8. Very good, Santosh. Can you believe 30 MCQs, 14 correct and correct? That means 44 marks. If you write this 44 correct, imagine you passed the exam. How easy it is? Not at all difficult. Not at all difficult. Read the second question. Now we will not spend more time now onwards because it is revision. Sixers. We'll play sixer for every ball. Read this. Second question.
There are practical and legal limitations on the auditor's ability to obtain audit evidence. Explain with the help of examples.
So tell me, is there any practical and legal limitations on auditor's ability to obtain audit evidence? Yes, inherent limitations on the audit and auditors' practical limitations to obtain audit evidence because management or employees sometimes intentionally will not give information. Carefully or sophisticated frauds done by top level management cannot be easily identified by the auditor. And auditor, because of his legal capacity, cannot search like income tax officers, how they search and all. Auditors cannot search. So there are practical and legal limitations. I have given you 3 examples also. So read 2B.
DEF and Co. Chartered Accountants successfully carried out the audit of Shree Garments for the financial year 2019-20. After the completion of the audit, they were found material misstatements due to fraud in the financial statements, which were not noticed and reported by the auditor. Management alleges that it is the failure on the part of the auditor. coming.
Again, basics, first chapter for new syllabus students, there is a separate chapter on this frauds, SCA 240 and all the responsibility of the auditor. And, for old syllabus students, this is given in first and second chapters itself. Whether you study in first chapter or as a separate chapter, it is basic common sense. Planning and performing audit according to standards on auditing is the responsibility of the auditor. Digging all the frauds and errors and reporting all the frauds and errors is not the primary objective of the audit. If I have planned and performed audit diligently with due skill, professional care and professional skepticism, and then after completion of the audit and reporting also, if there are some frauds and errors, you cannot hold auditor responsible for it. It is not audit failure. This is the answer. Next, go ahead, continue.
There are two interlinked perspectives of independence of auditors. One, independence of mind, and two, independence in appearance. Explain.
Super. Very good. So you have this, International Federation of Accountants Committee, IOCPP, that, threats and all that ethical practices. Do you remember all these things? Their independence is also given. Very clearly they said independence as such, independence, as appeared. So look here, there are two interlinked perspectives. One is independence of mind. So you'll write independence of mind, underline, under that you write auditor should be independent of the management. Auditor should not have any influence or bias. Auditor's opinions shall not be influenced, or under subordinate of any other pressure or any other's influence. This is called independence of mind. So independence is a state of mind wherein the auditor's opinions are not influenced. What is independence of mind? Independence is a state of mind, a state of auditor's mind where the auditor's opinions are not influenced. Independence in appearance. Auditors restrain themselves from appearing not to be independent. That means they should not do anything which, any third party, reader of the financial statement, reader of the audit report, perceive it to be a situation where auditor's independence is compromised. These 2 points you need to write. Then you will get 4 marks. You understand? Read this one.
Professional judgment is essential to the proper conduct of an audit. Discuss.
Well, what are the professional judgments usually when you do audit? Tell me, give me some examples. Professional judgment means applying your experience to a given situation. Professional judgment means applying your experience to a given situation. It is essential to conduct audit. Give some examples. Materiality. Determining materiality is the professional judgment of the auditor. Determining nature, timing and extent of audit procedures. Determining, evaluating management's estimates in the financial statements. Management's judgments will be assessed by the auditor. That is auditor's professional judgment. Conclusions to be drawn in the light of audit evidence. That is also professional judgment. Enough. 3 points if you write, you will get 3 marks. So read the third one, ma.
The auditor has to make inquiries on certain matters under section 143(1) of the Companies Act 2013. Discuss those matters.
Do you remember 143(1)? Day before yesterday itself we have discussed. Loans and advances based on the made by the company, based on the security or whether properly secured. Do you remember? The terms and conditions are prejudicial to the members of the company or to the company. Whether the transactions merely represented by book entry are prejudicial to the company. Where the company not being an investment company or a banking company, whether so much of the assets like shares, securities or any other shares, debentures or any other securities of that kind are sold at a price which is less than their cost of acquisition. Whether loans and advances made by the company are termed as deposits, whether personal expenses are charged to revenue account, whether from the books and records of the company, if it is mentioned that the shares are issued at cash during the year, whether the cash has actually been received. If no cash has actually been received, whether the manner in which the transaction is recorded is regular, proper, correct and not misleading. 6 matters, 6 points. Oh my God. Students ask me, Sare, you'll by heart provisions, Sare. No, you should be like this. If, see, I'll ask you one question. Straight question without any twist. If you cannot write this also, what is the level of your preparation? 6 marks, bang on. 6 out of 6 you should get. That's all. Read the next one.
Of internal control into 5 components provides a useful framework for auditors to consider how different aspects of an entity's internal control may affect the audit. Mention those components.
Remember, I told you the 5 components. I'll not tell you. You tell me. I told you that this is international framework, CASO, given in 315 standard on auditing. Do you remember 5? Aisha is saying monitoring. If you start in proper flow, you will remember everything. You are jumping into 4th point. Control environment, correct. First one is control environment. Second one, risk assessment. Exactly. Very good. Next. Risk assessment. Third one, control activity. Fourth one, very good, information system and communication. Fifth one, anything is fine. Fifth one, monitoring, internal control monitoring. Superb. So read the next one, ma.
Third, your firm has been appointed as an auditor to audit the accounts of an auto parts manufacturer, ABC Limited. Elucidate the matters to be considered by an auditor in developing his overall plan for the
general question. So many times we have read. Clearly I told you what are the specific points to be considered, factors to be considered by the auditor while preparing audit program, while preparing overall audit plan. Easily you can write the answer. Okay, terms of engagement, objective of the audit, scope of the audit, reporting responsibilities, communication with management and those charged with governance. All these things you'll write. Okay, read the next one.
Fourth question, your firm of chartered accountants has been appointed as an auditor of nationalized bank. Explain how will you proceed to carry out audit of provisions and contingencies.
Tell me. Audit of provisions and contingencies. In case of bank audit, how will you do? If you are old syllabus student, this is not relevant. If you are new syllabus student, this is relevant. But even if you are old syllabus student, also you know how these provisions are calculated. Banking companies is there no in advanced accounting. The auditor has to verify the latest circulars of Reserve Bank of India to identify the rates at which the provisions are to be calculated on various categories of assets. Point number 1. Point number 2, whether the bank has followed appropriate procedures in classifying their assets into standard assets, substandard assets, loss-making assets, doubtful assets. 3, from the general ledger of the bank, the auditor has to identify for each class what is the total amount involved in specific category of the asset. 4, the auditor has to verify whether appropriate provision as per the Banking Regulation Act and RBI guidelines is applied, and auditor has to verify the arithmetical accuracy. 5, the auditor has also to verify whether the classification, categorization of assets into non-performing assets and performing assets is done properly by the bank. That's next, continue.
Clearly, the objective of the auditor as per SA 706 also define emphasis of the matter paragraph and other matter paragraph.
Bolo, what is emphasis on matter paragraph and what is other matter paragraph? So first you will write standard on audit is 706. Emphasis on matter and other matter paragraph says that the auditor includes certain matters in his audit report without modifying the opinion. That is first point. Second point, what is emphasis on matter paragraph? An item which is to be accounted for or disclosed in financial statements, which is a part of financial statements, which is already disclosed or accounted for in financial statements for the understanding of the readers, for the understanding of financial statements of the readers. If auditor wants to emphasize or to bring it to the notice of users or highlight, then he will put it in emphasis on matter paragraph relating to financial statements. If it is for the user's understanding of the audit or auditor's responsibilities, then he will put that in other matter paragraph. That's all. You understand? Simple. 4 marks. Next. Read for CMA.
ABC and Company is an audit firm having partners Mr. A, Mr. B, and Mr. C, chartered accountants. Mr. A, Mr. B, and Mr. C are holding appointment as an auditor in 4, 6, and 10 companies respectively.
Okay.
1. Provide the maximum number of audits remaining in the name of ABC and Company.
Wait, tell me, how many total audits can be done by ABC and Company? Do you remember? 20 per partner. 20 per partner. So 20 into 3 is 60. 60. So 60 audits can be done. Next. Read the second one.
Provide the maximum number of audits remaining in the name of the individual partner, that is Mr. A, B, and Mr. C.
So A is having 4, so he can do 16 more. B is having 6, so he can do 14 more. C is having 10, so he can do 10 more. Next, read the next one.
Can ABC and Company accept the appointment as an auditor in 60 private companies having paid up share capital less than 100 crore, 2 small companies, and 1 dormant company?
Yes, because this private companies having paid up share capital less and small companies and dormant company, they are not included in the audit ceiling limit of 20. No, specified number of audits 20 does not include exceptions. Next, continue.
Would your answer be different if out of those 60 private companies, 45 companies are having paid up share capital of 110 crore each?
Yes, because 45 companies are adding, already these 3 guys put together has 10 plus 6 plus 4, 20, no? So they can add only remaining 40. 45 they cannot add. Already ABC put together are having 20. Another 40 they can get. Another 45 they cannot get. That's it. So 4th question is over. Then read the 5th question, ma.
5th question, fraudulent financial reporting often involves management override of controls that otherwise may appear to be operating effectively. Explain the techniques used to commit fraud by the management overriding controls.
Do you remember this? Recording fictitious transactions, making inappropriate accounting, year-end accounting adjustments, concealing or not disclosing the facts, engaging in complex transactions, altering and manipulating accounting records, falsification of accounting records. These are the, even if controls are there, management can override controls and do these kind of things. Okay, next, B.
The Controller and Auditor General shall be responsible for compiling the accounts of the Union and each state from the initial and subsidiary accounts rendered to the Audit and Accounts Officers under his control by treasuries, officers or departments responsible for the keeping of such account. Explain.
Do you remember 9th day of our revision plan, we have discussed in detail that government audit. In that government audit, Controller and Auditor General responsibilities, duties, 9 points we have discussed. In that 9 points, do you remember Controller and Auditor General is responsible for compiling the accounts of union government, compiling the accounts of state government, and compiling the accounts of union territory. That para you need to write. That's all. Next. Read the next one. Write the next one.
Give some examples of circumstances in which it is appropriate to prepare audit documentation relating to the use of professional judgment where the matters and judgments are significant.
So, auditors' judgments are significant. Give some examples of circumstances in which it is appropriate to prepare audit documentation relating to use of professional judgment. That means, where did you use your professional judgment? Then what are the points you need to write in the audit documentation? Tell me some examples. Hello, tell me some examples. SCA 230. In that, in audit documentation, what are the points to be included in the audit documentation relating to auditor's professional judgment? Well, but only if you read, you will tell. Read D point, ma. Read 230 again, okay. Read D point.
You are an auditor of PQR Limited, which has spent rupees 50 lakhs on research activities of the product during period under audit. Board of Directors want to recognize it as an internally generated intangible assets. Advise and discuss the conditions necessary to be fulfilled to recognize the intangible assets in the financial statements.
Super. Simple answer. According to AS 26 intangible assets, in case of internally generated intangible assets other than goodwill, the activities should be split into research activity and development activity. Research activity, whatever the amount that is spent on the research activity, should be charged to P&L. No intangible asset can be recognized out of research activity. Development activity can be capitalized subject to certain conditions, even if it is an integrated project as a whole, which consists of research and development activities together. Also, the auditor has to ensure that the company has made a distinction between research activities and development activities and capitalizes only development activities. If such a distinction cannot be made, the whole R&D cost shall be charged to P&L. In the given case, the contention of Board of Directors is wrong, because according to accounting standards, this 50 lakhs should be charged to revenue and should not be capitalized. That's all. So next they're asking you information technology audit, audit under CIS environment, data analytics they're asking, and then they are asking you statistical sampling. You remember sampling we have done? Statistical sampling. And then they are asking you branch audit. So what is the coordination between branch auditor and the company auditor? And then they are asking you a reduction of share capital, which is there in the law also, which is there in your chapter 8 if you are old syllabus student, and audit of financial statements if you are a new syllabus student. That is all. So guys, tell me how many marks you have got in this exam. If at all this is the exam, will you be able to get, how many of you are confident that you can get 80? 44 MCQs and true or false are only there. So do you think you'll be able to get 80? Or do you think you'll be able to get 70, 60? Or how many marks you will get? Type in the chat box. How many marks you can get? Type in the chat box.